Hi, this is Jeffrey Cohen with Chicago Quantum, here to talk week 35, and then came Tuesday. So we're into a holiday weekend. This is normally when the summer ends and the fall starts, and there's a lot more stock activity. There's a lot more activity, a lot more excitement in the markets, and I just want to talk about kind of where we're at. Sort of started off, we had some really good news this week. I passed the Series 65. We are on our way to being an Illinois registered investment advisor. And going through the FINRA process, going through the state of Illinois process, very exciting and tons of learning. So I want to thank those who were very supportive online, on Twitter, on StockTwits. Got a lot of love with that, which was helpful. Tons of studying. Oh my gosh, I know the banking regulations now, all the different types of investments, trusts, estate planning, you name it. Annuities, insurance products. I had to study it all. And so that's great. So we're just going to dive right in. So first is IWM is the Russell 2000. It's the small caps. And we talked about this being kind of at a plateau earlier. And as you notice, these are lines drawn by FinViz, not by us. So we're looking at 1 year. And pretty much since mid-February, we've been in a trading pattern, a consolidation pattern. So small caps. So, I mean, they go up, they go down, right? And so they've gone down, a little double bottom there, and then they're coming back up again. I look at this and I think, okay, kind of makes sense. Big picture, Main Street, United States, doing okay. Not doing great. You know, there's a COVID restrictions, but on the other hand, people are really struggling to find people to work. There's a lot of productivity going on, and so we're looking pretty flat there. And what's interesting is that's a 10% range, up and down, so from 210 to 230. So yeah, it's just where we're at with the market. We're going to take a look at the at this for the week. This is the picture. So you can see where it's red is where you've had problems, and where it's green is where we've done well. And so financials not doing well at all. Right there, you've got a lot of red, except for data and stock exchanges. And those are always a pretty good bet. And then PayPal, but the rest, it's pretty poor. Look at Wells Fargo down 11%, Schwab down almost 5%, American Express 5%, Capital One down almost 11%. This is a tremendous decline for these companies in 1 week. Of course, Apple looks good. Apple's one of the most valuable companies in the stock market. Tesla's up, Home Depot's up, Amazon's up, Comcast, Netflix. So it's interesting. Microsoft, Nvidia. You know, your money is flowing to the big caps. Now, I did notice, I was very happy about it, healthcare looked good for the week. What's interesting about healthcare, though, is it really wasn't that good for the week. There's an index that we use, an ETF called XBI. XBI is a biotech ETF, exchange traded fund. So you look at double bottom, this thing really started falling in, again, February, about the time with the small cap declines. It dropped, it came down. It's been range bound. And you can see here, just like the Russell, we're starting to make the next turn down, I guess. And so interesting, the XBI and the Russell run together because biotech stocks tend to be smaller. It's fine. That's fine. So, but, you know, we're heavily invested in biotech. So for us, it makes a difference. We're going to take a look at the full picture here. And you see biotech, for the most part, is green, which is great. BNTX. BioNTech, they're the ones with the COVID vaccine. CGen is down, a couple down, but in general, things are looking pretty good there. So, you know, the other thing I always worry about here is the basic materials. So you would think that basic materials when the market looks like it's going to be going up, should be doing well. Industrials should be going up. And right now, industrials look weak. The economy's weak, right? Basic materials look pretty weak. Railroads weak. And energy is not great. The exception of PetroChina. Not sure why that would have such a great time. And then China Petroleum. Maybe the Chinese market popped up, but no. So, I don't know. I'm not pulling anything out of it. I would say let's wait till Tuesday. Tuesday's going to be a big day. We're going to decide what's going to happen, right? All collectively. Labor Day weekend pops. People come back to work. I noticed downtown Chicago looked pretty busy this past week. We took the exam on Friday downtown Chicago. It was kind of nice to head in, park, go to a large office building, and go to work. So, yeah, I'm not sure what we're going to see. Oh, take a look at that. AbbVie is down almost 7%. It's interesting. Not normal. And then Zoom is down 12.5%. So there's some big stocks that haven't done that well. If we look here, Moderna for the day up 5%. And then we look at what dropped. PVH is down. Carnival Cruise, Royal Caribbean Cruise. I actually have a friend who's heavily invested for his and her own position in Royal Caribbean, because when you buy stock in Royal Caribbean, you get a discount on the cruises. I don't know if you guys knew that. And so here's Norwegian Cruise Line. This is generally not a good story for the economy and for COVID. And so these are our leading indicator, canary in the coal mines. Just is what it is. I wouldn't overthink it, but it's fine. I'm going to show you the stocks that we're in. Right? Just full disclosure, right? Because I never want you to think I'm acting in not in your best interest, because we pretty much always act in your best interest here. So Corbis is down almost 5% for the day. Akebia dropped 3.5%. Satsuma down. These are all small cap, high risk. Satsuma is so thinly traded. I mean, there's days when it trades 35, 50,000 shares. Corbis is a bit of a meme stock. There's a bunch of people that are used to swinging it. And Akebia is one of those buy and hold value plays. I'm not sure why it's down. I have some ideas, but they're not factual. And then you take a look at the calls. Calls have all dropped. So, and then XBI we just track. So the whole biotech index was down almost 2% on Friday. It's interesting. So, pretty rough end of the week, but it's fine. We're long, and we're pretty confident on all of these. But again, Tuesday's going to come, and we're going to see what's going to happen. So this is the S&P 500. This is the large cap capitalization weighted index. Let's take a look. Let's go 6 months. You can see where we talked about it before. Still up. Pretty much up forever. It's kind of hard to bet against that thing. But S&P looks great, I mean, you can argue that it reached a peak here, but it's also been pretty peaky here and earlier in August, and kind of peaky here in July and early July. It kind of peaks about twice a month here. And so maybe people got to wait till they get their next paycheck and then drop their money in a 401k. It could just be passive investments in the S&P 500 as people have bought into the indexing. And what I learned on my Series 65, modern portfolio theory requires prudent investors to use diversification to help their clients. And so diversification means passive index funds like the S&P 500, SPDR, SPY. So this is what we're seeing. I mean, it's hard. I'm not feeling very confident. I actually called 44.30 as a top, right? Which would be like right around here. And so we're up. We're up almost 100. We're up over 100 points from where I called it. Just because I just think the market's a little frothy. We look at QQQ. Looking pretty good there over the 6 months. It just continues to go up. It looks like it broke through where it was in early August, and now we're at kind of a new peak. We We look at the Treasury 10-year. Let's go over 6 months, give you a good point of view. You're at 1.3. We're kind of at that normal range, but it was higher earlier in the year. We thought we were going to have increasing rates, and so they've come down. The Fed is keeping the rates low. The Fed is actually keeping money supply high. The market sets the rates. Remember that. Market supply and demand sets the rates. But there's a lot of cash out there. I mean, I read something that the large banks take their excess reserves and they park them at the Fed overnight to earn 5 basis points. The amount's been over $1 trillion for a while now. Just imagine for a minute $1 trillion US with nothing to do. Can't even earn 0.05% overnight. Now, you lend me the money. Someone like me, right? Maybe you're gonna send me a credit card and I'm gonna charge it up. Maybe that's 20% interest rates. You give me money to buy a car. It's gonna be 6 or 8% interest rate. You give me money for a mortgage. Probably 4. After all the fees and stuff, you're probably gonna earn 4, maybe even 5% on my mortgage. But I'm earning, basically the banks are earning 0.01%. Maybe that's why. If we go back to FinViz, we go back to the financials, and we go back to the banks. Let's do this. Let's do this, Jeffrey. Show me those banks again. Banks are not doing very well. Look at that. For the day, you can't really tell. Let's just look for a month. Nah, banks look okay for the month. I mean, everything looks okay for the month. But, Wells Fargo is down. But JP Morgan, Chase, Bank of America are up. So that's interesting. Citibank is up. Citigroup, I should say. So this could be more localized, right? I guess you're living on 5 basis points. It's crazy. It's crazy to think about it. Let's take a look at Bitcoin. For a while there, Bitcoin was not looking so good, right? It kind of, look at all the lines I drew back then. But I'm going to do a daily chart 6 months, and you can see how Bitcoin dropped, rode low for May, and then bottomed in mid-July, and then has been coming back up again. So the desire to be in Bitcoin picked up really in August. While the market has low volumes, maybe money parked itself into Bitcoin. And we'll just have to see where we go. There's no real volume change here. It's been pretty flat. Although volume was low when the price was low. So that's always an interesting discussion to have, right? Volume rises a market. Volume drives up a market. Always look for volume confirmation in a market. So let's take a look at something like Akebia. By the way, love the stock, great stock. Let's take a look at volume plays here. Over the past, we don't even have to look that long. We'll go out like 2-3 weeks. And you can see volume was up when it fell. So it fell with conviction. And it fell pretty good here, down to about 230. And then the volume bottomed here. I think the at the market program ended, and they just let it kind of ride. So it settled in at about 260 to 270. And then we had a nice volume day, picked up 285, and then volume's been steadily increasing. Right? And then a little drop in volume and a little drop in price. So volume increasing as the stock goes up because people are kind of jumping into it. There's interest. And so you can't say, look for volume today because tomorrow it's going to go up. You can say, look for volume today, and today it goes up. So this is not something where you can predict into the future, because if you look here, volume's up. Actually, no, right here. Volume's up on a down day, volume's down on an up day. Volume up on an up day, volume's down, feels like a down day. Up and then down. And so it's just not predictable. Let's take a look at the overall macro. We always like to look at this. So the money stock. So M2, again, had to learn it formally in the Series 65 exam process, study process. This is your coins, notes, and circulation. This is your checking accounts. This is also your savings accounts, your short-term time deposits. So think of like your 1-year CD or less, small CDs. And you can see that money in the bank, money in cash continues to increase and actually just popped up, but not much, right? So for May, 20.4, 20.4 in June, 20.5 in July. So that's not a lot. The money stock has the trajectory is flattening on your money supply. It's fine. That's what the Fed's been up to. By the way, thank you, because I know you guys drove up money supply, through the COVID process, and I'd love to see that thing start to taper. Now we look at the velocity of money stock, and actually the last reading, Q2, right, updated August 26th, you are dramatically low. Look at this. There's been a decline in the velocity of money since 1998. And it really accelerated over this past year. And I think that's because money is dropping like into the stock market, into banks. They're not lending it. There's no borrowing. There's no real multiplier effect. And so as long as the money supply the velocity of money stays low, you're going to see money's tired. Money's sitting. Money's not doing much. It's not multiplying. And so this inflationary pressure will start to rise if you see this thing rise. This, I would say, is a leading indicator for inflation. You see this go up, you run. Inflation. Now let's take a look at total assets. So, one of the things we've talked about last week, we talked about how the Congress has a debt ceiling, U.S. federal government debt ceiling. So here is what I look at. So of course, we borrow a lot of money. We borrowed, I want to say it's like $25 trillion. But this is the amount of money this is the amount of assets, of debt the Fed is holding on its balance sheet. So if the Fed, let's say, has borrowed a total of, I'm just going to throw out a number, 32 trillion. I know it's not quite that high. It's probably closer to 24 trillion, 25 trillion. Okay? They're holding a third of it. So you borrow money, you buy back a third of your debt. If you were a company, you would do that to delever your balance sheet, to reduce your business risk. When you're the federal government, I'm not sure what you're doing. There's no business risk here, right? But you just took back a third of your assets. Now, some of those are mortgage-backed securities, but not many. There could even be some corporate securities in there, but in general, those are government securities. So what you could do is you can start to pay those off. You could just retire them as they mature. Right? Now I'm not borrowing anymore. Now I'm kind of leveling out. Now I'm putting more money back into the system. But maybe I can use this, because it's kind of flattened. Maybe I can use this along with money supply to try and damp down those inflationary pressures. I just feel like I'm in a good spot right here. Like, you wouldn't want to go sell off $1 trillion, because now you're selling off debt, right? And when you get rid of the debt, cash moves. So you want to be very thoughtful on how you're doing this. But I think we're in a good spot here. I think we're in this constant incline from right here, from July of 2020 at almost $7 trillion in debt that they're holding, assets they're holding, to 8.4. It's a 20% increase. You can start to taper that down. Basically, you could just let things mature, and you're paying out cash, and that could work for you. So we got to think about what we're doing there. So, not much more to talk about. I would say for us as a business, we are extremely focused on driving our. Here, I'm going to. I got a lot of love there on StockTwits. I'm feeling good about it. I just want to show you some of the pictures I took over the week. You start to feel what kind of where the week was. Hopefully, none of these are inappropriate. At least I don't think they are. So this was how Akebia was going up, beast mode. Because I mean, when the stock goes up like 20% in a week, 10-20%, it's a move like that. Had to study the bond ratings. This is another clean and jerk, right? This is a representation of Akebia and how we stay focused. We can get it to go up. This is Corbis. So Corbis continues to ride a downward trend. And the challenge you have on Corbis right now, look at this, no volume. No volume. I mean, you can't see that. Very, very low volume. Extremely low volume. And so what do you do with that? You get a stock that's just not moving, right? It kind of bottomed out. The company has authorization to issue 100% more shares. They went from 150 million authorized to 300 million authorized. They haven't been issuing them. They haven't at the market offering shelf registration. Think of it that way, where they can sell at the money and they haven't been using it. And so there's no love, there's no trust here. But I like it because I like the work that they're doing. I like the way they're using the endocannabinoid system at a pharma grade, not plant grade. And they're working on things. And I'm just hoping they come up with something. Bible for option strategy. Guy Cohen, just right. Keep studying. Choosing a retirement solution for your small business. By the way, we're probably going to open up a retirement account for our firm. These were the stocks. So one of the things that we did this week is we went into Medium and we updated our article. Let's see if I can get it for you. I mean, I don't know that we're going to be able to do this as a registered investment advisor. We're going to have to put a lot of this stuff behind a paywall and start to manage it out. But these are the top 20 inefficient stocks that we picked. These are efficient stocks. There's a shorts in there too. These are the shorts for the down market. Got a couple of views, right? Look at that. You got 7 views on the article, right? 3, 2, 3. So not a lot. We earned 14 cents writing this article. Isn't that amazing? But what is interesting is we published bona fide data on our Chicago quantum model. So I'm not sure if most of you know, right? But that's not really that normal that you would build an algorithm and then just start sharing all the data with everybody. And so here we started the article on July 11, and it was July 12 morning was when the calls were valid. And just the summary result, over 35 days, you would have made an incremental 17.55%, basically comparing shorting the S&P 500 versus shorting these stocks. These were the dog stars. These were the down stocks. And during a tumultuous market, these are not going to go very well. And so it's just what we did, all the details, right? How we did it. We upgraded things. We learned things about how to pick dog stocks. So some people want dogs. Some people want to know that their stocks are going to go down because they're not so optimistic. I mean, I'm optimistic on my biotechs, but let's be honest, the biotechs haven't been doing so well. If I would have shorted my stocks, I probably would have made more money than going long. Because in general, they've been dropping. This is one of my favorite powerlifting because you can see she's working hard. Look at that. Look at that great form, too. So this is what it takes sometimes to lift these stocks. You need volume, you need excitement and enthusiasm. as opposed to just time, paying off a bond. She's got it too. So, beta. So, one of the things that we did this week, I actually want to share this with you. It's a lot of inside baseball here, but why not? So, we decided this week, actually last week, that we would publish better information for investors. Truly valuable information. So, we used to have market questions and data, which I got to tell you, no one's looking at. This is hundreds of data entry points on things like, I'll get out of here. There it is. Free data, information on the markets, questions and answers. There's all kinds of info. And what happened was TD Ameritrade reached out and said they might want to partner with us. They might want to offer our services. And as an investment advisor, now I understand what they mean. We might have been an agent to TD Ameritrade. I'm not sure. But interesting. And they said, you know what? Post definitions and tweet them out. So what is swing trading, Jeff? You talk about swing trading. It's based on the average time an investor holds a position in a stock. It's a few days or a few weeks, right? Slower than a day trader, but faster than a buy and hold investor. Oh, great information, Jeff. Thanks so much. Nobody's reading this. You know what they're reading? They're reading this. They want to know, Jeff, tell me your negative beta stocks. I talk about what they are and I post them. So if you want to invest in negative beta stocks, here you are. Hey, Jeff, what's up with stock splits? A stock split is a corporate action where the company's board of directors, blah, blah, blah. This is a stock split. And here's all of the stock splits and all the reverse stock splits that have happened over the past year. Out of 4,600 stocks that passed data validation. All right, that's pretty cool, Jeffrey. And then our most popular page right now is our high yield U.S. common stocks page. Income investors prefer stocks that pay a large dividend, providing a chance to be paid while you wait for those capital gains. Now, our biotech stocks are not paying a dividend. Can you imagine if I made 3-4% waiting? I'm still expecting these to go up 100, 200%. I love a dividend, right? So here's the top dividend payers last year. Doesn't mean you're going to be the top dividend payers this year, but it gives you a feel for where to start looking. And so what happened, the reason I bring this up is we started posting these, and then people are starting to look. So if you were to do a search on negative beta stocks, we are the second listing. Investopedia and then chicagoquantum.com. I had to take a picture of this. I was so happy last week that we did this. Can you imagine being the second Google search? That's great. We're getting hundreds of looks every week this way. And now you're going to see things around dividends and around stock splits, and we're becoming more popular. So we're going to keep trying to find information that most investors care about and just post it out there so the Chicago Quantum becomes a household name. I just posted this. I really thought this was great. Choose your path to financial security. Our financial experts can help you choose the best annuity to fit your goals. Get my free quote. So, we're looking as an investment advisor. We have to figure out how we can get people not just to browse our website, but to start buying. So, Corbis. So this was something I thought was important. So early on in studying for the Series 65, and I want to show you what it means to study for a Series 65. Not only did we look at hundreds of websites, but we took practice exams. Series 65.
It's 13.
This one was great. This was by Greenlight, the Securities Institute of America. This was a good book. But you know what? This was better. This was the Test Teachers Publishing. I want to give you a point of view, though, on how thick that is. So what we did is we read through, there's a key facts section. We did 2 practice exams, and we had good reference material, which we're going to keep. So there's a lot of studying. I got to tell you, we studied. So one of the things we found out though was there's market makers out there, and those market makers, they're making a market. They're making it easy for us to buy and sell stocks, even when no one else is out there. So when I talk about like a Satsuma trading some days, 50,000 shares. Corbis, there's times where it's just not trading. I mean, you could look at like 1,000 shares traded in an hour. You're like, what's going on? So what happens is different market makers or specialists in a stock make a market. Now they have to have 100 shares. So what happens is every once in a while you get a big dog. GSCO is the market participant ID for Goldman Sachs. And they have been making a market in Corbis. So what happens is they stand ready to buy. So if the stock's at 121, they stand ready to buy 10,000 shares. And you can see order volume. So the volume traded in the NASDAQ is 45,000 shares. So they're standing ready to buy and sell 40,000 shares, which is almost the whole volume of the day in this particular exchange. Minus 4 cents, minus 5 cents, minus 8 cents. On the other hand, they stand ready to buy plus 3 cents, plus 4 cents, plus 6 cents, plus 8 cents. So here's the good part, right? If you're buying it minus 4 cents and you're selling it plus 3 cents, you're making 7 cents a share. You don't mind. This is how you make billions of dollars. This is the other type of business that we could be in if we could figure out a way for a quantum algorithm to give us an edge. It's just being a specialist, just making a market. You make 7 cents. Even if you made 5 cents a share, this is terrific, right? Now, you have to have deep pockets because let's say the market's dropping and they hit you, right? And so now you own maybe a couple 100,000 shares for a couple $100,000 that you weren't really planning on holding. You don't have a position in the stock. You're just making a market. And so at some point the market goes up, you're going to have to sell them out of your own inventory. I just think it's interesting because I watch where Goldman Sachs is with Corbis and it moves, right? It moves up and down. And so it's a very quick way of seeing where's the market with Corbis. And one of the things that I'll do is I'll track, what's the bid and what's the ask and where are they? And you can see NITE started to buy. So when you see NSDQ, that feels like retail. That's us. If I were to buy 100 shares, that's where I would be, NSDQ. But Knight is a specific specialist firm, a market maker, a high-frequency trader. So it's interesting to see them in at $1.21. By the way, good for them because the stock went up to $1.30. They made 9 cents. Here's me, feeling pretty happy. I've been on a weight loss program. I'm feeling good. I mean, I got the shirt and everything. And then you see in the background, we actually prettied up our office, and so it's nice. And we've been making little PowerPoints for people. It's good. Here's the down stocks again. Here's a picture of the Medium article that we put out there. So here's the other thing. The IRS has great information on retirement plans. But it takes a long time to go through and figure it out. So I'm understanding now one of the roles of an investment advisor for individuals is to be able to explain the different retirement plans and then, where they'd be of advantage to somebody. Just information on a stock. This was interesting. This is Corbis, and there's 7.2 million shares shorted. But any given day, they say 2 million shares trading, which would be 2 and 7, 3.5, 3.6 days of short. This was hitting 10 days of short. You just didn't see the market. You didn't see the volume in the market. And so I think part of why Corbis went up to $1.30 is from short covering, but then it starts to drift back down again on low volume. This is Corbis. This is just, it's a weak stock. Just wanted to post. This is how we make money. So we put this out on Twitter, Stock Portfolio Analysis Services. This is how we get paid. And then on the bottom, you see Medium articles explaining how it works and recent examples. Here's a picture of biotech. We're always kind of checking out the biotech market. It seems to fluctuate day by day. And I mean, so much more that we're posting. This was interesting. Basic materials. I mean, there's days where basic materials just do terribly over and over again. So, this is one last chart I'll show, and then we're going to close it up. So these are the dog stocks. See if I can zoom in for you. View. Come on, give me a zoom in. Can't. This is what you got. So here's the 20 stocks. Here's how they started in July 9th at the close. We use adjusted because it adjusts for splits and for dividends. Here's where the S&P 500 was. This was the spider, so it's the ETF on the S&P 500. Here's the August 2nd open, and here's August 30 open. And then we're basing it on 15 trading days and 35 trading days, accounting we had one stock that paid a dividend. And you can see tremendous negativity in these stocks. And so you can pick dogs. We proved it with a quantum algorithm. And now if you want to be a client, we can pick them for you. I mean, we don't take custody of client funds, so you're going to have to trade your own money. But we can help you. This is what we do. And it's interesting times. So I want to thank you very much for listening. It's Jeffrey Cohen. Hopefully you have a great week. Enjoy your weekend, because Tuesday's coming, Labor Day's over, and it's back to work for most people. And I'm expecting to see more volume and more excitement in the market come Tuesday. I'm not sure whether it's going to be up or down, but it'll definitely be interesting. You take care now. Bye-bye.